Hi there, and welcome to Hardman Talks. I'm Larissa Adams, and today I'm joined by Paul Mylchreest, our metals and mining analyst at Hardman Co. Paul has covered the sector since 2005, and he's got a background as a macro strategist. Paul, thanks so much for joining us. How are you doing today?
Yeah, very good. Hi, Larissa. I'm really looking forward to talking about one of my favorite subjects at the moment.
Yeah, we are excited to hear what you've got to say. I think we're probably kicking this off with our punchiest Hardman Talks discussion yet. Is silver the cheapest asset on the planet? There's really no mincing your words there. So I know we're all really keen to hear why you believe it's the most undervalued commodity right now. And with such a provocative title for this Hardman Talks, maybe let's take a step back and just hear a bit more background on silver and what it's used for.
Yeah, certainly. So, in my opinion, silver is not that well understood by many investors, both professional and retail. It has a surprisingly wide range of applications and in some ways is unique. In terms of financial markets, we think of silver as one of the precious metals, along with gold, platinum, and palladium. It's traded globally, primarily in London on the LBMA, in New York, on the COMEX exchange, and in Shanghai. If we start at the beginning, silver was, and to some extent still is, a monetary metal. In fact, it was used as money even more than gold between 3000 BC and the end of the 19th century. The pound sterling, for example, is a reference to silver, and the US was on a gold standard until 1873. China was on a silver standard until 1935. Now, silver is also an industrial metal. It has a very wide range of uses. For example, electronics and electrical components, medicine, and green energy. Silver is the best conductor of electricity, being superior to copper, and is used in a multitude of products that contain electronic components, including smartphones, computers, cars, and consumer and industrial appliances. Painting silver in the form of ink onto a surface creates an electrical pathway, reducing the need for wires. In the medical sector, silver acts as a biocide, killing microbes. It's incorporated in medical garments and face masks. And silver is the most reflective of metals, reflecting 95% of the visible spectrum, which accounts for its photovoltaic use in solar panels. And if you go back more than 20 to 30 years, photographic film and processing was also a major use for silver. And although that's no longer the case due to digital photography, that decline has come to a halt. And due to its precious nature, it's also widely used in jewelry, as you well know.
Mm, thank you. Some interesting background there. Definitely not short of usage for it. So I guess we want to understand the outlook for the silver price. So could you give us an overview of some of the key issues which underpin your outlook for a deficit in the balance between supply and demand, sort of before we delve into more of the details?
Yeah, so to begin with, I'd like to clarify that the Silver Institute, which represents the official figures, estimates that the silver market has been in a deficit for the past 5 years, from 2019 to 23. I'm breaking down the figures for last year. Total supply was estimated at 1.011 billion ounces, and total demand at 1.153 billion ounces. And that gave a theoretical supply deficit of 142 million ounces. Now, if these figures are correct, and they may actually understate the situation, at least in 2023, as we'll show, it seems odd that the silver price hasn't performed better already. But looking ahead at how the fundamentals of silver should play out, I see a situation where there's not enough supply to satisfy the demand, at least anywhere near the current price of $27 an ounce, as I expect the supply deficit to rise in the coming years. Now, the demand component is twofold, both of which I see growing. Firstly, demand for silver as an investment in various forms by investors, and secondly, as an industrial metal. And as with gold, the silver supply is more complex than with other commodities. There are three components. The first one is mine supply, which doesn't change much from year to year, which is one reason why it's going to be difficult for the mining industry to respond to growing demand. Second, silver is relatively easy to recycle, and silver can be recycled from jewelry, silverware, and industrial scrap. And thirdly, there are substantial above ground inventories of silver, similar to gold, but because silver is bought for investment purposes and is effectively being hoarded rather than consumed. Now, obviously, this can lead to it being dishoarded and diverted to industrial applications, but equally, demand for industrial applications can be crowded out if investment demand is strong, and that's what I expect.
Yeah. So could you explain the supply picture, especially in relation to the mining industry?
Yeah, so silver supply globally can be categorized at approximately 80 to 85% from mine production and the balance from recycling. A key factor for the silver price going forward is likely to be the inelasticity of mine supply, because the process of building a new silver mine from discovery to production can easily take 10 years or even longer. Based on Silver Institute estimates, mine production peaked in 2016 at 900 million ounces and was estimated to have been 831 million ounces in 2023. That's a decline of 8%. The largest producing country is Mexico, which produced about 200 million ounces of silver last year. And in second and third places were China and Peru, with slightly over 100 million ounces. In 2024, mine production is expected to remain similar to last year, and we expect that it will remain relatively flat for the coming years. Another aspect of silver supply which could have a positive impact on the silver price is that 72% of annual silver production from mining is as a byproduct of mines which are actually targeting lead, zinc, copper, and gold. So if there was weakness in global economic growth, which led to a cut in mine production of some of these other metals, that would curtail silver supply. Silver recycling is also on a downtrend, or was on a downtrend during 2014 to 2016. The trend reversed during 2017 to 22, but during the last 2 years, volume has been relatively steady at about 170 million ounces. So in summary, there is little chance that silver supply is going to rise significantly in the next few years.
Okay, so if the supply is set to remain relatively flat, let's maybe talk about the demand. So what is the outlook for silver demand in industrial applications?
Yeah, it's been rising, and my analysis suggests that it is already significantly higher than the current figures from the Silver Institute acknowledge. The reason for this, as I'll show, relates to green energy and primarily the explosive growth in solar power or photovoltaic demand, which occurred in 2023. Bloomberg's primary research service estimates that global solar installations increased by 64% to 423 gigawatts in 2023, of which China accounted for 240 gigawatts, or about 60%. However, the 64% growth in solar installations likely underestimates the growth in silver demand for this application. Now, for some years, the solar industry was attempting to thrift on silver in order to reduce costs. However, this trend has now not only stopped, it's reversed, driven by higher silver loadings in more efficient solar panels. To explain briefly, N-type solar cells consist of 3 cell types, TOPCon, HJT, and IBC, which are replacing the older PERC or PERC-type cells, and the switch is happening rapidly. A research article published by Wiley estimated that the N-type solar cells require 30 to 80% more silver than the older type. So we probably had a near doubling of silver consumption used in solar panels last year. And we estimate that the Silver Institute's estimate for silver used in solar panels last year of 190 million was significantly too low. It was probably more than 250 million. And the Silver Institute's estimate of 230 million ounces for this year will probably be more like 300 million ounces.
Great. Okay, so I think let's end off and switch to looking at silver as a financial asset and how you currently view silver as an investment proposition.
Yeah, so as we've just explained, and all other things being equal, the deficit in silver supply and demand is likely to persist for the foreseeable future and is probably going to increase. This will make silver increasingly attractive as an investment, and it can take various forms, from taking possession of physical bullion to buying ETFs backed by physical silver, and we urge investors to take extreme care in choosing an ETF, as well as investing in silver mining stocks. Now, the more silver purchased as an investment, the bigger the supply deficit and the more potential crowding out of industrial demand. So if industrial and investment demand are rising simultaneously, this should exert a powerful effect on the silver price. Both gold and silver, as monetary metals, act as stores of wealth and inflation hedges. And these attributes are becoming increasingly important as we've seen a shift in the past 2 years to a more inflationary environment. However, the debasement of currency has a long way to go, in our opinion. So if we take the US, the 2023 budget deficit was $1.695 trillion, and budget deficits below $1 trillion are unlikely to be seen again. The projections by the US Congressional Budget Office are for the deficit to be on a rising trend, reaching more than $2.7 trillion by 2033. And it's not just the US, the world is awash in more than 300 trillion of debt, and another debt crisis is probably inevitable at some point. So on that note, it's worth emphasizing a characteristic of gold and silver, which sets them apart from all other financial assets and might prove key in the next debt crisis, especially if policymakers resort to printing money. And that's that physical gold and silver are the only financial assets which are not somebody else's liability. Compared with gold right now, the silver fundamentals look even more compelling. Gold and silver prices tend to move in tandem, and while gold usually leads in the early stages of bull or bear markets, the move in silver tends to significantly outpace gold in due course. Effectively, it has a higher beta. Now, gold's been making a series of all-time highs in recent months, and in contrast, silver remains more than 40% below its all-time high of $50 an ounce, which it reached in 1980 and again in 2011. Copper, just by comparison, is only about 14% off its all-time high. So just to finish up, another key metric is the gold to silver ratio. That's the number of ounces of silver which can be bought with an ounce of gold, and it currently stands at about 85. And that makes silver look very cheap in historical terms. The ratio was set at 12 to 1 during the Roman Empire, and it remained in the 12 to 16 times range until the late 19th century. And during the past century, it has been highly volatile in the range from 15 to 20 times during the peaks in gold and silver bull markets to more than 100 times for short periods. And while the ratio is currently 85 times, the ratio at which silver is being mined relative to gold is only 7 to 1.
Okay, brilliant. Thank you so much, Paul. I think that concludes our rapid overview of silver's characteristics and the key factors impacting supply and demand. I think it's been really valuable for investors as you've outlined a number of metrics, macroeconomic and monetary trends, which should be favorable for silver and silver mining companies in the next few years. So thanks again. To our viewers, please don't forget to like and subscribe to our channel. Thanks for watching. We appreciate your time. Please do share your comments below. Otherwise, we'll see you back here on Hardman Talks next time. Thanks.